Welcome back to Investing Talk Podcast.
Today we're looking at Lumen Technologies. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Lumen Technologies. It's one of the most compelling, maybe even confusing stories in telecom right now.
Confusing how?
Well, the company is really navigating this major structural change. They're actively trying to shed that old identity, the legacy phone company vibe.
Right.
And pivot hard into being a high-growth player. Think enterprise stuff, edge cloud, security, next-gen networks.
Okay, and that kind of pivot, I got to be expensive, right? If we look at the financials, I mean, just starting there, It looks a bit rough on paper. We're seeing a TTM net loss, trailing 12 months of $1.65 billion. That's a big number.
It is.
A headline number that probably scares a lot of people off, even with, $12.69 billion in TTM revenue. So why look past such a significant loss?
Yeah, you really have to understand that this loss is, it's almost a symptom of the cure, if that makes sense. Not really a sign of failure itself.
Okay.
That $1.65 billion reflects the cost of this, frankly, painful restructuring. Selling off the low-margin legacy bits, tearing down old infrastructure, and pouring money into the new fiber and software platforms.
So it's the cost of change.
It's the cost of transforming, an elephant into a racehorse. It takes investment.
That reframing helps. It's investing now for future profit. So, okay, if the big overall number is messy, we need to dig deeper, right? Where's the future profit supposed to actually come from?
Exactly. You have to look squarely at the strategic segment split. The real focus, where management's putting the resources, is the high-growth business segment.
And that's where we find?
That's where you find those higher-margin products. Things like edge cloud computing, managed security services, premium networking for big companies.
Okay, and are we seeing it happen? Is that growth actually, materializing?
Yes, and this is a really crucial point that gets missed if you just look at the overall revenue decline. That business segment, it grew 3% year over year in Q2 2025.
3%. Doesn't sound earth-shattering on its own.
Right, but here's the key thing. The margin on those services, the edge cloud, the security, it's drastically higher. We're talking maybe 20, even 30 points higher than the old copper line stuff.
Okay. So that 3% growth in the good part of the business is economically much, much steeper growth if it were in the old low margin stuff. That's serious operating leverage.
Precisely. It's the difference between selling pennies for a dime versus selling dimes for $1. It just scales differently.
Gotcha.
And meanwhile, that legacy part, the mass market segment, they're basically treating it purely as a cash machine.
Just milking it.
Pretty much. Management's letting it decline, but in a controlled way. They're pulling out cash from there to speed up the pivot into those recurring high-margin business services. It's really a calculated race against time.
Can the new money come in faster than the old money goes out?
That's the million-dollar question, or rather billion-dollar question here.
Okay, so given they're investing heavily, but also carrying debt from that legacy business, their balance sheet, how healthy is it? Are they stable enough to actually win this race?
They look stable, yeah. And for an infrastructure company like this, the metrics seem manageable. They've got about $1.7 billion in cash and equivalents.
Okay.
And that's against $10.6 billion in total debt. So if you calculate it out, the net debt to EBITDA ratio is around 3.2x.
3.2x. Is that high for a telecom? I know these kinds of companies often carry pretty hefty debt loads because of all the physical assets.
Yeah, it would be toxic for a fast-growing tech startup, definitely. But for a company like Lumen, more utility-like, owning physical assets that generate cash, it's kind of standard.
Right.
It basically means it would take them just over 3 years of their core operating profit, their EBITDA, to pay off that debt. And importantly, they have good liquidity. There's $2.1 billion in undrawn credit facilities.
Extra cushion.
Exactly. And maybe most importantly, $1.1 billion in trailing 12-month free cash flow.
And that free cash flow, the $1.1 billion, that's the gas money for this whole pivot, isn't it?
That's it. It supports the new investments, paying the debt service, and maybe, down the line, shareholder returns again once this transition settles.
Okay, let's switch gears a bit. The competitive moats. Telecom, networking. It's a brutal space. What stops giants like, say, Verizon or AT&T from just undercutting Lumen and grabbing those valuable business customers?
It really has to be that physical infrastructure we touched on earlier.
The actual pipes in the ground.
Yeah, it's literally dirt and concrete, and it's incredibly expensive to copy. Lumen serves over 1.5 million business customers, right? But their real structural edge is that huge proprietary fiber network, over 450,000 rote miles of fiber.
Wow.
And it's deployed globally in major metro areas. Trying to build that kind of network from scratch today, the cost and the time involved are just prohibitive for most.
So the advantage isn't just having fiber, but the sheer scale and reach of it, especially when they layer on these new services like Lumen Edge Cloud.
That's the key synthesis, yeah. They're using the existing physical network, the fiber, as the foundation. Then they deploy software-defined networking, edge compute, high-level security, all on top.
They control the whole stack.
Exactly. From the physical layer right up to the software running at the edge. It creates this integrated offering that's really hard for competitors to match unless they want to spend billions on infrastructure.
Okay, so if the competitive advantage is that solid, it probably shouldn't be a shock that the folks closest to the company, the insiders, seem pretty confident.
Yeah, insider buying activity has been extremely strong here. We saw key executives, CEO, CFO included, really upping their stakes back in August 2025.
How much are we talking?
Over 217,000 shares acquired in total, just in that period. That's not just a little nibble. It signals real long-term belief, belief in the value of that fiber and that this whole transformation plan is going to work out.
Right, they're not just looking for a quick pop in the stock price.
Doesn't seem like it.
Okay, so insiders are buying. The strategy seems sound. Look at the chart. The market seems to have finally woken up to this story lately. This stock has been on an absolute tear.
It really has.
Up over 295% in just the past 3 months, from around $3 to nearly $12.
Yeah.
$11.95. That's massive. So are the fundamentals justifying this price yet, or is this just like a classic momentum surge getting ahead of itself?
Well, technically speaking, the momentum looks pretty reliable right now, and importantly, it seems healthy.
Healthy how?
The stock's trading well above both its 50-day and 200-day moving averages. That usually confirms a strong uptrend with institutional support behind it. And if you look at the RSI, the Relative Strength Index, it's sitting around 62.
Okay, for listeners maybe newer to technicals, what does an RSI of 62 mean? Is it overheated?
It tells us there's strong bullish momentum. Buyers are definitely accumulating, but it's not yet in that extreme overbought danger zone, often considered above 70 or 80. So there could still be room to run before a major technical pullback is likely.
Okay. Any other indicators?
Yeah, the MACD, that's the moving average divergence, it's positive and trending up too. That confirms the strength of the near-term trend.
And we saw it break through resistance around $11. That seems significant.
Absolutely. Breaking $11 was key confirmation. So now we've likely established pretty strong technical support down around $9.50.
So based on that technical picture, what's a plausible trading range looking out, say, the next 3 months?
Given the current momentum, the news flow, a bullish range between maybe $10 and $14 seems plausible. Further upside isn't out of the question near term.
All right, let's talk about the biggest catalyst for that recent surge. The Palantir news. Stock jumped, 11% on October 23rd after they announced this huge strategic alliance. Tell us about this $1 billion deal. Why is it such a big deal?
Yeah, this wasn't just another partnership announcement. This is potentially definitive proof that the pivot strategy is actually working and gaining traction with major tech players.
Okay.
The alliance with Palantir Technologies is all centered around AI-driven security and analytics. And the synergy here is potentially game-changing. Lumen brings the physical network, that fiber connectivity right to the edge, the compute infrastructure,
The plumbing.
the essential plumbing, exactly. And Palantir brings its top-tier AI and data processing power.
So Lumen stops being just the pipe carrying the data and starts offering this fully integrated AI-powered service built right on its own network, solving real business problems like security and analytics in real time. That feels like a fundamentally different, much higher value proposition.
Precisely. They can offer this integrated, secure, super fast solution right at the network edge using that fiber moat we talked about. That's a model competitors who rely on, say, external public clouds or just don't have Lumen's physical footprint.
Yeah.
They'll struggle to match that.
Okay, so massive technical momentum, strategic validation with the Palantir deal. Yet the analyst community seems completely split, almost confused. The stock's near $12, but the average analyst price target is way down at $6.56. That's like a 36% discount. What's going on? Is the market just ahead of the curve, or are the analysts missing something fundamental?
It's a huge disconnect, isn't it? And it really highlights how hard the market finds it to price this kind of structural transformation in a legacy company.
How so?
Well, analysts traditionally use valuation models based on, historical telecom earnings, maybe asset liquidation value, and those models naturally spit out those lower targets. They're inherently skeptical about whether Lumen can actually pull off this big transformation completely.
But the stock price is clearly telling a very different story right now. It's just running away from that consensus. And even the analysts who are moving seem a bit unsure. Like Raymond James boosted their target to $5 but kept an outperform back in August.
Right.
Then Citigroup downgraded from buy to neutral just recently, end of October, even though they kept their target at $11.
Yeah, that Citi move is kind of the perfect example of the confusion. They basically acknowledge, okay, yeah, the stock is probably worth $11, but they downgrade the rating because they seem worried the stock ran up too fast. They're concerned the momentum got ahead of the fundamentals, catching up immediately.
So that skepticism brings us to some really crucial near-term events, right? Things coming up in the next, say, 0-3 months that could either pour fuel on the fire or maybe expose some of those risks the analysts are worried about. The biggest one has to be the Q3 earnings call, November 7th.
That call is absolutely the key checkpoint. Investors are going to be laser focused on two things, mainly. First, management's guidance of what are they saying about debt reduction, about the ongoing restructuring costs.
Okay.
And second, hard evidence of revenue acceleration in those AI and edge cloud services. Can they show real traction in that business segment? Can they give a strong outlook? If they nail both of those, that could really start to close that gap between the stock price and the analyst consensus.
Makes sense. What else should we be watching for in terms of volatility triggers in the next few months?
Well, beyond the earnings report itself, expect continued news flow around new product launches, both in edge cloud and managed security. Remember, that billion-dollar Palantir deal needs to translate into actual services customers can buy.
Right. Got to see the follow-through.
Exactly. And don't forget about the December ETF rebalancing window. That often creates predictable flows, buying or selling, for stocks that have made huge moves like Lumen has. Could add to the volatility.
Okay, let's touch on speculation for a second. The market always loves a good rumor. Are there any unconfirmed whispers, maybe adding some extra juice to this rally?
There's definitely a strong undercurrent speculation that Lumen could eventually be an M&A target.
Makes sense.
Yeah, I mean, with that fiber network, the growing edge cloud infrastructure, it's a hugely strategic asset for a larger company wanting instant scale in the enterprise market. Could be very attractive.
Any other rumors?
We might also see further integration announcements with Palantir, maybe in early 2026. Each one of those could give the stock another sustained boost.
And what about for longer-term holders? I think I heard whispers about maybe bringing back the dividend.
Yes, that's out there too. If the company really stabilizes its free cash flow after the restructuring, that speculation will likely ramp up. And then there are some very early stage rumors about possible pilot projects in quantum networking, maybe by Q1 2026.
Quantum networking. Wow. Okay.
Yeah, that would really cement Lumen's image as a forward-looking tech infrastructure company, not just, the old phone company.
All right. Before we get to a final rating, we have to circle back to the main risk here. This transition, this big pivot. It's still happening, right? It's not done yet.
Absolutely. The number one company-specific risk is still execution. Can they actually manage the decline of that legacy business smoothly? Can they grow the new high-margin services fast enough, all while managing that $10.6 billion debt load? It's a balancing act.
But it sounds like management's track record so far gives some confidence.
Yeah, I mean, they've generally shown they can navigate these transitional risks pretty competently, which is partly why you're seeing the current optimism baked into the price.
Okay, so let's try and tie this all together. We've got the irreplaceable fiber moat, the big Palantir validation, clear insider buying, showing conviction, strong technical momentum. Where does Lumen Technologies land on our buy scale right now?
Looking at all those factors together, we're assigning a strongly bullish overall rating here. Let's call it an 8 out of 10.
An 8 out of 10. Pretty strong.
Yeah, and what makes it interesting is that it seems attractive for potentially two different kinds of investors right now. You've got the short-term traders who might want to play the Q3 earnings catalyst and the ongoing news flow.
Right.
And then you have the longer-term investors who are looking for exposure to that structural growth story in networking, AI infrastructure, really capitalizing on that core fiber asset over years.
So I guess a core question for everyone watching the stock is Does the current price just reflect the market finally catching up to the technical momentum we've seen? Or are we actually witnessing a fundamental business transformation finally starting to hit its stride?